Hello, this is Dr. Giuseppe Paladini, founder of Stepping Bricks, and today we're going to talk about mortgages, mortgage interest rates, and if you should do a repayment mortgage or an interest-only mortgage. So when you start and you want to apply for a mortgage, you need a few documents in place. So the best thing to do is to contact a good mortgage broker because they're worth every penny, and then they can show you what interest rates are available right now for your personal circumstances based on your income. If you don't want to go to a mortgage broker, you want to check on yourself, for example, you want to see what kind of rates are available right now, you can go on the internet, and we're going to show you in a second on my mobile how you can find different lenders with different criteria and different products. So you need to understand what the products are, because based on their interest rate, which is not the only criteria when you choose a product, but it's also, for example, the length, the term length, and also if there is a product fee. Sometimes you have free valuation, but sometimes you have a £2,000 product fee or 3% or 5% of the loan amount. So it's always important to understand which product fits your needs. Now, the next things you need to consider when you get a mortgage is, should I do an interest-only mortgage or a repayment mortgage? What's the difference between the two? Well, it's quite simple. The interest-only mortgage, basically you repay only the interest on the loan amount. So let's say, for example, you borrowed £75,000 on a property of £100,000, then you only repay every single month just the interest on the loan. So for 25 years, if you set it for 25 years, your loan amount will stay the same, it never goes down. While the repayment mortgage is actually, you repay the interest and also a part of the capital. So also the capital split by every single month. So that means that your loan amount will decrease over the term of your loan. Which one of the two is the best? Well, it depends on your circumstances. For example, I will always say for investment properties to get an interest-only mortgage. Why should you do that? Well, because you have cash flow. So the more cash flow you have every single month, then the more you can build the cash pot for buying the next property. You don't want to just get one property and then wait 25 years before you buy your second property. So if you want to speed up the process and grow your portfolio, it's always better to have more cash flow and to choose wisely, to choose properties that can grow in capital appreciation, okay, so in value over time. Now, when do you use repayment mortgage? You use it only on your residential property, so the property you're living in. The reason for that is because you don't want to risk of losing your own home, so you want to make sure your loan amount decreases over the term, over time, and then you always do repayment mortgage for your property. So what we're going to do, we're going to see how you find products, mortgage products. So the first thing you need to understand is what product is best for me. Now, if you go on your mobile, you can check in a few lenders. For example, let's take the Mortgage Works, and then we'll see other lenders. But if you go through the Mortgage Works on your mobile, you just scroll down and you go on find a buy-to-let mortgage, which is quite simple. You know, it's a easy website to navigate. So what would you like to do? I would say purchase a buy-to-let property. And then, is the property HMO? You can say no. If it's a standard buy-to-let, are you applying for a mortgage through a limited company? Now, it depends what you select here. If you're buying through your personal name, of course you have different products. If you go through the limited company, you have a limited amount of products, but still, you know, depends which entity you buy the property with. Then you need to select the right product here. So let's say yes, you're buying through a limited company, and loan to value, let's say 75%, which means the bank is giving you 75% of your total purchase price, and you're putting as a deposit 25%. And then you just show mortgage results, as you can see here, and you have 8 results for a limited company in this case. For purchase, remortgages, and further advance, you have an initial rate of 3.99 at the time of recording, and this is a 2 years tracker. Tracker means that you have a fixed amount on top of the Bank of England base rate. So in this case, 0.49% is the amount of the lender, and then plus the base rate. So whatever the base rate is, if it's 3%, 3.5%, 4%, whatever it is, you just need to add it on that, and it will change every single month. While the fixed rate, if you want to fix it, let's say 1 year, it's 4.64. or 2 years or 5 years. If we go to another lender, and we can go, for example, LendInvest, they have a full buy-to-let rates guide. And again, you can see they can lend up to £1 million, maximum loan to value 75% again. So you need to put 25% deposit. And the term length, interestingly, is 7 to 30 years. So you can actually have a mortgage length of 30 years. So that is just a hint on how mortgages work at the moment and what interest rates you can get in 2023. So it's quite important you do your own research, you speak to a broker. I would say always engage with a professional broker because they are worth every single penny and they can save you a lot of money. So I hope you enjoyed the content of this video. If you like, just like and then subscribe and then comment because I can see every single comment. My name is Dr. Giuseppe Palladini. I'm the founder of Stepping Bricks and I'll see you in the next video.